Microsoft stock is trading at about $487 a share right now, with a market cap of $3.7 trillion and trading around 35 times earnings. Nvidia is about $187, worth about $4.4 trillion and trading closer to 55 times earnings. Both stocks have done exceptionally well this year, but for totally different reasons. So, which one actually has more room to run from here? Well, after looking at the numbers, I'm still not convinced that the market understands what's really happening under the surface. Microsoft just locked in a $30 billion compute deal with Anthropic on Azure, with the option to scale to 1 gigawatt of additional capacity later on. And Nvidia still owns roughly 92% of the GPU market, and its data center chips are becoming the foundation for almost every major AI deployment on the planet. But there's a signal in all of this that I haven't heard anyone talk about, and I think it could tell us which stock has the stronger long-term runway. That's why in the next few minutes, I'm going to break down exactly what it is and what it means for your portfolio. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. So most people already know the names Microsoft and Nvidia, but it's worth stepping back to see what these companies actually look like today, because once you zoom out just a tiny bit, you kind of start to see something that I think a lot of us could easily overlook. Microsoft is headquartered in Washington, and they were founded in 1975, which means they've been operating in tech for about 50 years. That's rare, and at least in technology, and that alone hints on why the company still matters today. Microsoft's core idea is very straightforward. They build software, devices, and cloud services that power both everyday life and mission-critical business systems all over the world. In other words, they sell the digital plumbing that the modern economy just can't function without. Now, you probably recognize Microsoft first for their Windows operating system, as well as Office apps like Word, Excel, and PowerPoint, and those products are still widely used today, but they're not Microsoft's main growth engine. Today, a big part of Microsoft's business is cloud computing. Their Azure cloud platform has become one of the company's largest and most important revenue streams. And this shift matters because recurring cloud revenue behaves more like a utility than a traditional software sale. Microsoft serves a wide range of customers. Individual users rely on tools like Outlook and OneDrive, while Fortune 500 companies and governments, well, they run the large part of their operations on Azure and other Microsoft services. So when a company serves everyone, from students to global banks, it creates a customer base that's incredibly hard for competitors to dislodge. Over time, the company has evolved from a traditional software licensing business into a diversified technology leader in cloud infrastructure, artificial intelligence, gaming through Xbox, professional networking with LinkedIn, and enterprise software such as Dynamics. And this type of diversification softens downturn risk because no single product line is going to determine the entire fate of the company. And much of this shift is a result of CEO Satya Nadella, who took over in 2014 and repositioned Microsoft for the cloud and AI era. His strategy effectively turned Microsoft from a slow mover into one of the fastest compounding giants in technology, and investors have been rewarded for it. And this evolution sets up a surprising comparison with Nvidia that most people do not yet fully appreciate. Nvidia began back in 1993 when founders Jensen Huang and a couple of others set out to build better graphics chips. Since then, the company has evolved from a niche graphics player into the backbone of modern AI and accelerated computing. Today is Nvidia is closing in on a $5 trillion market cap, and they control around 92% of the GPU market, with their technology embedded across platforms from Google, Meta, Amazon, and OpenAI. And that level of market share doesn't happen by accident. It's because of they have a technological edge that the competitors can't easily replicate. And rather than being just a chip company, Nvidia positions itself as a full stack computing platform. They design GPUs, high-speed networking gear, systems, and the software that ties everything together so data centers can function like giant AI supercomputers. In other words, Nvidia sells both the engine and the fuel, which increases switching costs for customers, and of course it locks in demand. Now, most people know that Nvidia for their GeForce RTX graphics cards that are used in gaming and content creation. But behind the scenes, they also build GB300 Blackwell Ultra GPUs for huge AI data centers, and they offer DGX Cloud, which gives customers power AI infrastructure that they can use like a cloud service. This behind the scenes business is where the real money is, and it explains why revenue has exploded faster than nearly any mega cap in history. Today, both Microsoft and Nvidia are part of the so-called Magnificent Seven. This is a group of 7 mega cap US tech stocks that have driven a large share of recent stock market gains and often dominate the major indexes like the S&P 500 and the Nasdaq because of their size, their growth, and influence on the broader market. But even within the Magnificent Seven, these two stand out for completely different reasons, which is why comparing them matters. So let's start by comparing their stock performance, because price action always hints at what the market believes will happen next. Microsoft stock trades at around $487, and Nvidia currently trades at around $187. If we compare the two, Microsoft currently has a market cap of almost $4 trillion and is trading at roughly 35 times earnings. On the other hand, Nvidia has a market cap of almost $4.5 trillion and is trading at roughly 55 times earnings. Higher multiples usually mean higher expectations, which can create opportunity or risk depending on growth velocity. Now, performance-wise, Microsoft stock is up about 16% year to date and about 17% over the last 52 weeks. On the other hand, Nvidia, that stock is up about 39% year to date and about 27% over the last 52 weeks. And this kind of divergence tells you that the market sees Nvidia as the higher growth engine right now. The real question is whether that pace can continue. And it's something that's come up in my Discord. And I know why you're all here. So let's talk about it, because this is where things start to get fun. Last week, Microsoft, Nvidia, and Anthropic announced a series of new strategic partnerships that tighten or is going to tighten their collaboration across AI infrastructure and enterprise AI services. Anthropic will significantly scale its Claude models on Microsoft Azure, powered by Nvidia systems, and is committed to purchase $30 billion of Azure compute capacity with the option to contract up to 1 gigawatt of additional compute in the future. And a commitment of this size basically signals that demand for AI compute is nowhere near slowing down. With this, Microsoft is making it even easier for businesses to use Claude. Through the Foundry program, companies can now tap into Anthropic's latest Claude models directly on Azure, giving them more model choices and Claude-specific features. And on top of that, Claude is staying within the Microsoft Copilot family, including GitHub Copilot, Microsoft 365 Copilot, and Copilot Studio, so that developers can keep using it day after day. And this matters because once a company's AI tools become embedded at the workflow level, it becomes incredibly hard for these customers to switch providers. And at the same time, Nvidia and Anthropic are also entering a deep technology partnership, working together on model and hardware design. The goal is to optimize Claude models for performance, efficiency, and total cost of ownership, while tuning future NVIDIA architectures for Anthropic's workloads using Grace Blackwell and Vera Rubin systems. This is essentially co-engineering the future demand pipeline, which is something investors rarely get to see this early. Of course, Satya Nadella explained how NVIDIA and Anthropic operate at completely or on completely different layers of the AI stack and announced a deeper partnership that integrates Claude models across Microsoft's entire ecosystem while expanding Azure capacity and collaborating with NVIDIA for future growth. And Jensen Huang, NVIDIA CEO, expressed enthusiasm for accelerating Claude with NVIDIA systems and noted that rising compute demand makes this three-way collaboration essential for broader AI adoption. So when CEOs speak this openly about scaling together, it usually means that the business opportunities are bigger than any one company can handle alone. The company leaders closed by emphasizing that the future of AI requires collaboration across the entire industry rather than being of a zero-sum mindset. Their shared vision is to build durable, scalable AI capabilities that benefit enterprises, industries, and customers all over the world. So this collaboration is not temporary. I see it as being in the early stages of what could become the backbone of global AI infrastructure. So is the news priced in? Well, let's take a look at what Wall Street says, because analyst sentiment often shows where the institutional money is going next. A consensus among 48 analysts rate Microsoft a strong buy with a high target price of $700. That's as much as 44% potential upside. The average score is 4.77, and it's been unchanged for the last 3 months. It's nearly a perfect score. Stability in analyst ratings usually reflects long-term fundamentals or a confidence in it rather than hype. Then we've got Nvidia. The consensus among 46 analysts is a strong buy, and there's a high target price of $350. That suggests as much as 87% potential upside. And the average score there, 4.74, and has gone up in the last 3 months. And rising analyst sentiment usually means that institutions believe the growth still has a lot of room to run. So if you had to choose one, and we're willing to take on a higher risk for potentially higher rewards, Nvidia probably offers the stronger upside since it's more directly tied to accelerating AI growth. However, if you're looking for a longer-term holding with more balanced and more stable risk profile, to me, Microsoft stands out as a better option. I hold Microsoft as the stock, and Nvidia, I hold it as part of a few funds that I own, but I don't hold the stock outright. So that's me. But what about you? What do you think? Which company are you rooting for? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it'll help others find the video, it'll support the channel, and you won't miss out on my next deep dive. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I'll see you next time.